Hi, everyone. Good morning, good afternoon. So glad you could be here with us. I'm Lindsay Lehr. I lead the payments practice at AMI. And today, just like my colleagues, I'm going to address 4 key principles that can help us cut costs in the payments industry and probably in other industries as well. The first speaks to primarily transparency and simplicity. Why these 2 principles? First of all, your cost-cutting strategy is going to vary depending upon what role you play in the payments value chain, right? But getting these principles down will probably help you no matter what position you're in. So number 1, transparency. We all know that the payments industry, the payments value chain, the payments processing process is quite opaque. It varies between countries. Sometimes it's regulated, sometimes it's not. And the more visibility you can get into how that value chain breaks down, the more power you will have to leverage yourself and have a successful negotiation with your suppliers. So if you're a merchant, for example, paying payment processing fees, there are a lot of different models on how acquirers and processors assess those fees that are common in the United States, not so much in Latin America, simply because acquirers it hasn't been demanded yet of the acquirers by the merchants. So for example, interchange plus pricing, in which you clearly see the cost that you're paying and the markup that you're being charged. So merchants can insist on payment processing cost transparency to try to figure out, am I overpaying? Am I really receiving the value that I'm paying for? And can I get any additional leverage? Similarly, for acquirers, aggregators, payment service providers, anyone on the processing side, if you're looking to move into a new country or want to improve your competitive space within your current market, really understanding the acquiring landscape, the processing landscape, what players are where, and how that value is broken up between those players helps you get the shortest and most direct line to getting those payments processed, and again, making sure your costs are competitive and that you're in the most competitive place within that value chain. Number 2 would be aiming for automation and simplicity. And this one is more on the issuer side, those who are consumer facing. In an environment in which everyone's pocketbooks are low on cash, automation and maximum efficiency will help us get ahead. And this is a trend that has been accelerating for some years now with respect to automation. And now more than ever, it's critical that banks and others have a really excellent automated customer service system in place, utilizing chatbots, utilizing AI and machine learning in their call centers to not only automate your customer service, but make sure it's really of high quality and making your customer feel really secure and well attended to. Making sure for banks that you're able to acquire and onboard new customers digitally. This is absolutely critical nowadays. Many banks in the region still do not have a seamless acquisition channel over mobile or over online banking. So this is an area where some banks may be falling behind in competitiveness and will save you money today in the short term and the long term. And issuers now that we are experiencing this massive digital acceleration because of COVID-19, issuers are starting to rethink their physical infrastructure. Do I really need this enormous branch network? What does the branch of the future look like? Can I repurpose or leverage some of my infrastructure to help me be in the best position going forward? So automation and simplicity being the principle number 2. If we go ahead to the next slide. Number 3 would be adjusting your product focus. You want your product focus to be most aligned with what is growing right now and who is disrupting the industry. Ricardo mentioned the consumer group that is most disrupting e-commerce right now are women, particularly single women who have families and maybe run their own business. We want to make sure that our efforts and our investments in products and marketing are aligned with what is growing. So of course, our affluent and our traditional customer base remains important because they drive a lot of consumption for us still. But we don't need to be promoting or investing in travel cards, in corporate cards, and some of these products that have been very strategic for us in the past and right now simply aren't relevant to people's lives. It's really critical, as Ricardo mentioned this as well, to do a very careful resegmentation of your cardholders and your customer base. Understand who they are. Understand at a new level what are the problems they're facing in their lives under COVID-19 that you can solve, that you can help alleviate when you're thinking about your rewards programs and loyalty programs. We want to make sure that they're aligned very strategically to be highly relevant and purposeful for who our customers look like today. And for all companies, company types in the payments industry and beyond, we want to make sure that while we're looking at cost cutting, we are simultaneously holding in our minds a long-term perspective. John mentioned that this is potentially the most disruptive crisis we've seen in the region in the past 20 years that we've been in this business. And when something is highly disruptive, that means permanent change is coming. So we want to cut costs now, put in some of these practices to cut costs, but let's not lose sight of the long-term and permanent changes that will affect our industry and make very selective and strategic investments that will set us up for long-term growth. So in the payments industry, what technology, what capital investments specifically in technology do we need to be making to make sure that we have maximum efficiency and that we're aligned with growth trends? So, things like machine learning, artificial intelligence, digital acquisition, these things cost money. Customer segmentation, reworking your rewards programs, these things are investments that will help us be aligned with industry trends going forward so that we don't fall behind once things stabilize and normalize. And finally, again, in line with that long-term perspective is making sure that we're taking care of our newly digitized customers. We're seeing the biggest provoker of digitization that we've seen in the past 10 years. And we need to make sure that, as Diego said, let's not waste this crisis. Let's take full advantage of this moment to bring new consumers and merchants into the digital fold and keep them there. That means driving new value to them every day, making sure they're comfortable, making sure they're secure, making sure they have a good, safe experience so that they will, so that there's no turning back for them, so that they don't revert back to a cash-based lifestyle, that they remain our customers for the long term.